Welcome to our session on professional liability insurance. In this chapter, we'll discuss what a malpractice insurance policy is, why it's essential for professionals, and how claims are investigated and settled. Our aim is to clarify risk categories and emphasize the importance of insurance for healthcare professionals. From a healthcare management viewpoint, it is essential to ensure every staff member understands the basics of malpractice insurance. Organizations should also develop and implement policies that clearly incorporate risk management and insurance coverage principles into their day-to-day operations. So, the learning objectives are: describe the purpose of a malpractice insurance policy, including risk categories and the importance to professionals of carrying professional liability insurance. Explain the elements and conditions of an insurance policy. Describe the investigation and settlement of claims. Insurance is a contract that creates legal obligations for both insurer and insured. The insurer agrees to assume certain risks in exchange for a premium, offering financial protection if specific events occur. In healthcare, this is crucial for safeguarding both organizations and professionals. Healthcare managers need to plan and allocate an appropriate budget for insurance premiums, thereby reducing the chance of unexpected financial losses. At the same time, it is important to clearly define the roles and responsibilities of the organization versus individual practitioners, so everyone understands their coverage boundaries. Every insurance policy must clearly identify the risks covered, specify the amount payable, and list the occurrences that trigger coverage. These are the foundational elements of a valid insurance contract. It's crucial for leadership to review policy documents thoroughly to ensure they cover the real-world clinical risks your organization faces. These details should be communicated openly so that all stakeholders, clinicians, administrators, and staff know exactly what the policy entails. Risk categories typically include property loss or damage, personal injury or loss of life, and legal liability. In healthcare, it's important to ensure each category is addressed within the organization's insurance coverage. Because healthcare involves multiple areas of potential exposure, leaders should perform comprehensive risk assessments to cover all possible liabilities. In addition, coverage should be updated regularly to keep pace with new services, technologies, and evolving risk profiles. Telemedicine can lead to unique risks, such as misdiagnosis, due to the nature of virtual interactions. Providers must confirm their policies cover remote services and obtain written verification from insurers. When it comes to telemedicine, confirm that any existing malpractice policies explicitly cover remote services. Educate healthcare providers on best practices and documentation standards specific to virtual consultations to minimize misdiagnosis and other telehealth-related risks. Important provisions in an insurance policy often include the policy period, how defense and settlement will be handled, the amount payable, and whether punitive damages are covered. Each provision can significantly impact both cost and risk exposure. Verify that the language in your insurance contracts addressing legal defense and settlement aligns with your organization's procedures. Also, be sure to clarify how punitive damages are handled to prevent financial surprises if a claim escalates. The first set of conditions usually includes the notice of occurrence, notice of claim, the assistance of the insured in investigations, and provisions about other existing insurance. These conditions outline the insured's responsibilities and how claims must be reported. Prompt reporting of incidents or occurrences is vital. By training staff on how to file incident reports and the correct timeline for doing so, organizations stay aligned with policy requirements and reduce the likelihood of denied claims. The second set of conditions covers assignment, subrogation, changes, and cancellation. This outlines how policies can be transferred, how insurers may seek reimbursement from a responsible third party, and under what circumstances a policy can be changed or canceled. Carefully monitor any changes or renewals to insurance policies to ensure they still meet the organization's needs. Understanding subrogation clauses, where insurers can recover costs from third parties, can also protect the organization's interests in the event another party bears responsibility. Recent data shows significant payouts for nurse practitioner liability claims over the past few years. Liability insurance exists to spread the risk of economic loss among members who share similar risks. As these risks increase, so do premiums. Incorporate liability insurance proof into standard hiring and credentialing processes to protect both the institution and its employees. Stay alert to trends in litigation and rising risks that could affect premium amounts over time. Professionals need their own coverage, particularly if they volunteer outside their primary workplace or act as independent contractors. Sometimes an organization's policy that contains an exclusionary clause that may not protect the professional from malpractice claims. For professionals who work or volunteer outside the main facility, set clear guidelines to confirm their actions are either covered under an umbrella policy or separately insured. Always verify that they have proper liability coverage before allowing them to perform any off-site duties. Advanced practice nurses, RNs, private duty nurses, and even students should consider personal liability policies. Relying solely on an employer's insurance can leave gaps, especially if the policy doesn't include certain activities. Make sure everyone knows exactly which professional roles your organization's insurance covers. In many cases, advanced practice providers, nurses, and even students will need supplemental personal coverage to fill potential gaps in the facility's policy. Insurance generally does not cover intentional torts, such as assault, sexual misconduct, or other deliberate harmful acts. In these cases, professionals are held personally responsible. Enforce a strict zero-tolerance stance on abuse, sexual misconduct, or any intentional wrongdoing. Individuals engaging in such acts will generally find themselves personally liable, outside the scope of any organizational coverage. Medical liability insurance can cover individuals, hospitals, outpatient clinics, and more. Its primary function is to offer financial protection when malpractice claims arise. Apply consistent medical liability requirements across all departments. Perform annual reviews of your policies to ensure coverage matches your current clinical services and any emerging areas of practice. The insuring clause generally provides for payment on behalf of the insured if an injury arises from malpractice, errors, or omissions during the policy period. This clause is critical to understanding the insurer's obligations. Encourage meticulous record keeping and documentation as a core part of clinical work. When combined with robust risk management initiatives, these efforts can dramatically reduce malpractice claims arising from errors, omissions, or misunderstandings. Coverage terms vary, but common areas include negligence, assault and battery related to lack of consent, libel or slander, and invasion of privacy. It's essential to confirm these specifics in your policy. Provide thorough training on consent procedures and the importance of patient privacy. Clear rules around confidentiality, including social media usage, help shield both patients and the organization from potential legal or reputational harm. Some healthcare facilities choose to self-insure their malpractice risks, setting aside funds to pay for potential claims. If you opt for this route, seek legal counsel to navigate regulatory and financial complexities. Healthcare facilities choosing to self-insure must maintain a sufficient financial reserve to handle substantial claims. Employing knowledgeable risk managers and legal counsel is critical to operating a self-insurance program effectively. Organizations often provide liability coverage for trustees or board members. This is an important incentive for qualified individuals to serve in governance roles without fear of personal financial loss. Offer straightforward guidance for board members on how to make and document decisions responsibly. It's equally important to confirm trustees acting in good faith are protected by the organization's insurance to attract and retain strong board leadership. For coverage to be effective, trustees must have acted within the scope of their responsibilities and in good faith. Policies should cover legal fees, fines, and judgments, even for actions taken while in office or after service. Foster transparent governance and keep detailed records of board activities and decisions. Regularly reassessing the scope of trustee coverage ensures continued alignment with legal changes and organizational needs. Healthcare organizations have the right to require physicians and other practitioners to carry malpractice coverage as a condition of medical staff privileges. Failure to maintain coverage can lead to suspension. Establish clear and strict credentialing requirements, including proof of malpractice insurance for all medical staff. Stay proactive by routinely checking coverage to protect against unforeseen gaps that may emerge over time. When a claim arises, insurance companies often evaluate the risk and may settle out of court rather than go to trial. This approach can save time and money, although it may affect future premiums. Effective claims management requires close collaboration with insurers and legal professionals to determine whether settling or litigating is most strategic. Maintaining comprehensive records and responding quickly to any lawsuit can significantly improve outcomes in contentious cases. Summary of key points to remember. Purpose of professional liability. Insurance protects healthcare professionals from economic loss due to malpractice claims. Spreads financial risk among those who face similar liabilities. Insurance policy essentials must include clear definitions of coverage, payment amounts, and triggering events. Key provisions address policy periods, defense and settlement, and coverage limits. Risk management in healthcare. Comprehensive risk assessments help keep policies aligned with evolving services, example telemedicine. Prompt incident reporting and thorough documentation reduce liability exposure. Individual versus organizational coverage. Certain roles, example volunteers, nurse practitioners, students, may need personal policies beyond the organizations. Zero tolerance for intentional misconduct, as such actions are not covered by standard insurance. Self-insurance and trustee coverage. Self-insurance requires robust reserves and specialized legal and risk management expertise. Protecting trustees with adequate coverage encourages qualified leadership and transparent governance. Claims investigation and settlement insurance companies often settle to contain costs, impacting premium levels. Healthcare managers must collaborate closely with insurers and legal counsel to manage cases effectively. Thank you for joining us for this comprehensive overview of professional liability insurance in healthcare. By understanding the fundamentals, policy elements, risk categories, coverage specifics and claims management strategies, healthcare leaders can create a safer environment, safeguard financial interests, and maintain trust with both staff and patients. We hope you feel better prepared to navigate the complexities of professional liability coverage in your own organization.